Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 28, 2025, and we're diving into Starbucks Q1 fiscal year 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Starbucks has just released their Q1 results, and there's a lot to unpack, especially with their Back to Starbucks strategy in play.
Revenue and profitability overview. Let's start with the top line. Starbucks reported consolidated net revenues of $9.4 billion for Q1, which is flat compared to the previous year. John, what does this indicate about their current market position?
While the revenue remained flat, it's important to note that Starbucks is in the early stages of their Back to Starbucks strategy. The operating margin contracted to 11.9%, primarily due to investments in store partner wages and benefits. Despite these challenges, they managed to achieve an EPS of 69 cents, which is above the forecasted 65 cents.
That's interesting. So even with the flat revenue, they managed to beat the EPS forecast. What does this say about their cost management?
It suggests that Starbucks is effectively managing their costs, even as they invest heavily in their workforce and operational improvements. The slight decline in net income to $780.8 million reflects these strategic investments.
Segment performance analysis. John, can you break down the performance across Starbucks' different segments?
Absolutely. In North America, revenues decreased by 1% to $7.1 billion, largely due to a 4% decline in comparable store sales. Internationally, they saw a 1% increase to $1.9 billion, driven by new store openings. The channel development segment experienced a 3% decline in revenue, primarily due to SKU optimization and a decrease in ready-to-drink revenue.
It seems like the international segment is a bright spot. What are the key drivers there?
The growth in the international segment is primarily due to a 9% increase in company-operated stores and the acquisition of a UK-licensed business partner. However, they did face a 4% decline in comparable store sales, which they need to address moving forward.
Strategic initiatives and future outlook. Starbucks has been vocal about their Back to Starbucks strategy. How is this playing out in their current operations?
Starbucks opened 377 new stores in Q1, which is a significant expansion. Their strategy focuses on enhancing partner benefits and improving customer experience. The declared dividend of 61 cents per share also shows their commitment to returning value to shareholders while they execute this turnaround plan.
What can investors expect from Starbucks in the coming quarters?
Investors should watch for continued progress in their strategic initiatives, especially in improving store performance and expanding their international footprint. The early signs are promising, but execution will be key to achieving sustainable growth.
Key takeaways. In summary, Starbucks' Q1 results show a company in transition with a focus on strategic investments and operational improvements. They managed to beat the EPS forecast, which is a positive sign for investors. John, any final thoughts?
Starbucks is on the right track with their Back to Starbucks strategy. While there are challenges, their commitment to partner benefits and customer experience is commendable. Investors should keep an eye on their execution in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Starbucks performance in the comments below.